Assalamu alaikum. Bismillahirrahmanirrahim. As you are aware now that we are conducting this seminar or webinar for the purpose of giving information and create awareness amongst the people about Islamic finance as well as markets. My presentation will be divided in two parts. One, Islamic finance, and one, stock market. Now, there is a very big correlation between these two. I will make you understand how. First, let's understand about Islamic finance. It is said that Islamic finance is modern and so on, but no. Islamic finance, not commercial finance, I'm talking about Islamic finance, is as old as 1400 years old. Into the type of Huzur Sallallahu Alaihi Wasallam, people used to uh, use Islamic finance for their daily purposes, guided by Huzur Sallallahu Alaihi Wasallam. And it was practiced all the way until in the until about 1950 when commercial banks, commercial institute, which are non-based, came into limelight and highlight just because there was benefit to them. So they prominently use this particular thing, in Islamic finance got on the back seat because Islamic finance was not so organized, and these people got themselves organized. The crux of the non-finance, non-Sharia finance, banking, so on, the crux is interest. And interest is one of the biggest sin in Islam. And in fact, Allah has permitted trade, but has forbidden Islam, forbidden uh, riba or interest. And all other sins like the derivatives, the day tradings, speculation, gambling, and many other sin businesses, which is haram in Islam, were practiced by the uh, modern commercial businesses. Now we come back again to Islamic finance. Islamic finance is ethical in nature, social in nature, moral in nature, and socially responsible. Now we need to understand few things, few pointers I've just noted down. Is you may ask some, you may have some doubts in how, what are the options for Muslims to invest their funds. And Islamic finance gives a rightful solution vis-a-vis other form of uh, commercial options and instruments. Islamic finance is more uh, clean, neat, and very uh, um, very sinless. You know, it doesn't allow you to. It doesn't allow you to do businesses of sin. It prohibits. It's haram. It's non-permissible. It disallows you the interest, insurance, so-called interest-based banking, etc. Is again disallowed in Islam. So here in Islam, Islamic philosophy may ask you how a stock. Now, what are the options we were talking about? There are hardly any options available to Muslims. Number one, if you talk about banks, it's interest based, disallowed, insurance companies, securities trading, and so on and so forth. So many of the things are, most of the things, financial instruments are impure and haram. But Islamic financial instruments are halal, permissible, and not prohibited. The reason being, all the haram portions, bad portion is removed from the uh, co- conventional uh, instruments. So this is the best option left to Muslims as compared to these things. But you may again question okay, why it is, how it can be Sharia compliant when there is so much of sin available there. The Sharia scholars, after rigorous research as well as experts in finance, they have studied this and they have come out with certain conclusions that if you do a proper screening of the stocks listed on the markets should be removed. Now, how that can be done? It they have the scholars is given few criterias laid down by them, uh, and our particular Sharia board is IIFB, Islamic University of Finance Board, with eminent scholars and eminent alims, muftis, etc. have given have come out with the criteria or norms. Now you apply this norm. How you apply these norms to make it pure is by it has got two. It is in two categories. Number one, the type of companies and businesses, and second, the type of and second is the financial status of the company, whether it is interest based, etc. So here, what is removed? The business which is around. Now, as a it's arbitrary, and it's a fact that any activity done by Muslims has to be halal. When we eat food, we see it's halal or not. What we wear is halal or not. So in every aspect of our life, we see that it should be halal or permissible. So here in the first criteria, we will remove the companies which are actually sin businesses and not allowed in Islam. Number one, we don't the businesses, the things which you can't consume, we cannot trade and do business there. For example, liquor. So as drinking is prohibited, similarly business of that is also prohibited. Second, uh, weapon of mass destructions, cig- tobacco and cigarettes, and all such businesses where the activity uh, is haram cannot be traded in the market. So we remove these companies from the normal conventional universe. That is, there are more than 4,000 companies listed in the markets. What we do after screening, some companies comes out because of not uh, not proper businesses. And the second part is the financial ratios, or you can say ratios, the threshold which has been given by the Sharia board. Now, here the Sharia board has given some leniency, though it is broadly within the parameters of Islam, but with some leniency and some um, uh, what do you call, some easiness to give, to have this business. Now, why this leniency is because we don't have option. We don't have option what to do, what Muslim, where the Muslim will park their funds. Banks are not allowed because of interest. Bonds are not allowed because of interest. Debentures not allowed because of interest. Insurance is not allowed. So, where money can be kept? A person is doing job. Now he is having some saving. What he will do? He can't keep it in banks, where actually these banks are not Islamic in nature. They are commercial in nature, and they deal in interest. They give interest. They borrow on interest, and lend on interest. So because of this, uh, so we have no options. So the best option available or remains within this is equity. Now, why equity? Equity market has got, first of all, there is a totally misconception that equity market is not for us. In fact, equity market is more near to Sharia than all these banks, because equity market is based on profit and loss sharing. Means profit should come with the risk that is critical to Islam, which is very imperative. Second, you share profit and loss is one thing. Second important thing, which is advantage in this thing, is we get dividends, we get bonuses, we get all kind of returns, capital gains, and one more important advantage is uh, the stock market has, or equity market has, is the tax benefit. The long-term capital gain takes only 10 lakhs. That too, after higher than the after 1 lakh of profits. So if you generate 1 lakh gains or profit, you don't have to pay any tax. But after which you have to pay 10% tax in the long term. That is more than 1 years. And whereas short term is concerned, within 1 year, the flat rate of tax is 15%. Now, if you see these both, it is less than the normal taxation standards. So again, stock market not only helps you in creating wealth, also helps you in saving your money by way of taxation, etc. So we need to we are telling you an important analysis. I'll tell you how Islamic finance or Islamic investment is better than commercial. Apart from philosophically speaking, that we said it because of the reasons we quoted, that it is sin based, etc., etc., the non commercial. And and it is the Islamic is more socially responsible, more ethical, more moral, etc. But what we have observed after going through this criteria, which is given by the Sharia scholars, and we've seen this uh, screen, this uh, the norms are giving stocks which are so good that they all outperform the normal market. This is very good and very important and very sacred. And here comes important thing is your faith in finance. So you are dealing in finance and keeping your faith in intact. Get a better returns, good returns with keeping your faith in confidence and faith alive. So you are faithful where your religion or spiritualism is concerned, and at the same time, where world is concerned, worldly affairs are concerned, you are earning a decent amount. So when we went through the screening, we observed that there are about 60% of the companies or 65% of the companies that are commercially they have got uh, the number of stocks in terms of market capitalization. As you are aware, market capitalization is capitalization number of price of the stock multiply by the number of shares. So that gives you the market capitalization. Now the market capitalization of these Sharia compliant stocks is almost 65%. Imagine. And the best part is this 65% is only from 30% of the stocks. So only 30% of stocks give you 65% of the market cap, whereas other is about the stock gives only 35%, 40% of the market capitalization. This shows the inherited strength of Sharia compliant stock. So since there is a strength in the companies, the results so given, the returns so given, the performance of the companies in stock market are far too better than the non-Sharia stocks. And we have various observations and our research and etc., which shows that we've got better return in terms of indices. Now, another important aspect uh, which should have told you earlier is the Islamic finance is gaining a lot of popularity, and it's growing at a rate of 18 to 20%, whereas commercial is hardly 10%. So we are far too more fast, growing faster than the commercial bank, than the conventional or commercial bank which with non-Sharia. So these banks and these compliance stocks have always given a better returns as compared to this. If you see this, this is mentioned or it is there by all the indexes. Now I don't have time to give you the detail about the indexes, but see, the very fact that it is in demand, the very fact it is getting popularity and growth is because if you see there is indexes of in almost all the exchanges, major exchanges in the world, has got Sharia indexes, meaning it's getting popular. People have not rejected, people accept it. There is a there is a index in Sharia index in England, which was in fact was inaugurated or was started by uh, Mr. Brown, the then Prime Minister. There is a index in America, USA. There is a it's in Japan. It is in Australia, in entire Gulf region, as well as in India. So India also NSE and BC has got indexes, Sharia indexes. So why this in India being a non-Muslim country still having a Sharia index? Although most of the Muslims are not participating, but yet because of its uh, genuine growth and because of its inherent advantages and because of its uh, commercial implication, positive implication, it is there all over the world and particularly in India. Indian stock market also has given a higher return as compared to the Sensex and BS. One can check out. I don't have time to give you all the details right now. Sorry for that. But so that this demonstrate what? Two things. One, the popularity of the index and how important it is in the world, and it's growing at a very faster stage. And second, the performance of the indexes and index performances then percolates to the stocks. The stocks perform well, index performs well, stock performs well, the index is performing well, index performing well. So it is obvious that the stocks are performing well. So stocks overall, lesser stock. Now, if you see today, out of 4,000 stocks in India, almost 1,000 stocks are Sharia compliant, out of which big companies like at least minimum 5,000 crores plus capitalization company are around 1,000, around sorry 250, whereas 250 300, whereas overall it is 1,000. Overall it is 1,000. So this demonstrates again that lesser company, so less companies, and yet such a good results. This again goes long way to tell us the benefits of Islamic finance and how it is there to stay and grow. There are we are talking about investment, so this is the option. Whereas otherwise, Islamic bank, Islamic insurance, they are already there in their own forms. Then few things I've downlisted is our performance also. If you see, of we pragmatic wealth management private limited are primarily into research. We do research on stocks and then give the advisory and help people to create wealth. We have recently given we give some examples that we gave call some months back or almost a year back on say companies like Trident at 15 rupees went to 40. It stood 40. So this then we give Finolex industry at 150. Today's 225. So this shows, and plus well spun at 80 rupees. It's 150 now. Wipro we gave it around 550 or something. Today it's 650. So these are all multi-bagger in the making. So the amount of returns stock market gives the highest. Now, one more thing I would like to tell in this context is that the various instruments, those Sharia or non-Sharia, like commercial bank, real estate, mutual funds, uh, and banks, and, gold, all take it in together. So you take it together doesn't give their return as much as equity market gives. Now it's a belief that because equity market gives has given highest return, that is quite itself shows the fact that it is Islamic. So Islam always tends to benefit people. Now, number one, if you see the return for gold is 5% in the long term, real estate 9%, bank interest is about 7 to 8%, 6 to 7%. Whereas equity market has given return of 14 to 15 over a long period of time. Although last 2 years uh, there has been extraordinary boom, so the returns have been tremendous. Sometimes market remains in sideways for years also, 2 years, 3 years also. But overall in the long term, market goes up and up. It has been my observation because for 20 years I've been doing research and I've been doing research and found out that market in the long term in a developing country has to go up because it discovers the prices it and gives the better returns. Now, in conclusion, I would like to say that Sharia has given a very good uh, part to us, which is where two important things which I like is faith and finance. Again, I repeat, why faithful? Because it is beautiful. It allows you to continue your faith, so you don't have that misconception or misapprehension. The only apprehension, if you demand, is some element of risk. If but risk is can be taken care of with proper research and proper guidance. Now we have been doing research. There are research includes two types of research. There is fundamental as well as technicals. Fundamental tells you what to buy. Commercial and the technicals tells you when to buy and sell. Now, when you know what to buy and when to buy, gives you it makes you easier for investment in equity market because fundamentals deeply goes through and understands the nitty gritties of the companies like their earnings, performance, growth, future projection, etc., etc. And the technical analysis, it is sort of social science. It is more empirical in nature, and it tells you about the uh, the trend analysis, the trend of that company. So that helps you to uh, to bring in efficacy and efficiency in buying stocks because you can at lesser time you can get more returns, more returns. So after having understood this aspect, um, I would like to say few more things, but I've already covered few things, and now it is not so time constraint is also there, but I'll still try to cover some important aspect. Now, some people would are asked me to tell us more, little more about the markets. Now, I tell you, markets undertone is bullish, quite bullish. Though recently market did corrected and with a sharp correction, but overall in the for the long run, in the long run, market is still bullish, and we'll see a new high maybe next year or year after. But this is going to continue, could remain in your range between 17,000 and 18,000. Above 18,000, start moving up again. So, like we have this is how it looks like. Um, so, I think so I've covered some of the important aspect. Now, if somebody has got so many questions, he can to us, put up to us, so that we may try and answer them. And because of time constraints, if someone cannot be, some people can't be answered, will be we will send the email through email to them, and you can also we've already covered this. Somebody just recently asked me, uh, okay, what are the criterias? So we have already told you about the criterias, and now if you see, somebody was the numbers in the criteria. So like we have got criteria, as you said, some leniency has been given. Now here, the criteria is number one. I'm trying to satisfy Mr. Tossi, who just gave a question on on particularly special criteria and what which we use, and many people the word also uses, and our Sharia board is approved. So that is a stock in a debt to market capitalization. Apart from first criteria, that all the non uh, forbidden businesses, forbidden prohibited activities in Islam is not allowed to trade also in, and one can't invest though in those companies. So that is one is the company part, and the second is the ratio part. The ratio part of the criteria is the debt of the company should not be more than 33% of the um, 30%, 33% of the uh, 33%. So if it exceeds even one half a percent of 33%, we eliminate that to be Sharia compliant stock, and it has to meet. Now, second was cash to market capitalization also should not exceed 33%. Receivables also should be 33, not exceed 33%. So, which what it means, and plus, most important is the interest income. Now, companies do have got some companies got interest income. Some have got higher income, some lower income. Now, for the sake of uh, making commercially viable and Islamically um, liberal, a bit liberal, commercial interest is forbidden above 5%. Now, 5% impure income should not exceed 5% of the total. So, meaning why is Sharia scholars are giving this 5% leniency or 33% leniency is because there are no option left. Now, where a Muslim will invest? So they have got the Sharia scholar have got certain authority to with looking into for the interest of the is the interest of the people at large. They have uh, being little lenient and given this criteria. Now somebody asked why 33%. So 33% is the bare minimum. But although after screening we have seen the debt is not never more than average debt is not more than 6 to 7%. 6% is almost on the higher side. Same with cash and same with bank. And whereas interest income is concerned, though allowed is 5%, but it is only hardly 1 to 1.5% in the actual working of it. Now come now Sharia scholars perhaps has given this criteria of uh, uh, 33% is based on that certain facts that 30% is less than the least Sharia can expect. The uh, worst part is 33%. Though it is not allowed in the sense, it has been said they try and bring down to 25, bring down to 10%. Now, I've been personally instructed by the scholars, see to it that it comes down. So we are looking into that also, how we can reduce this ratios and if less and less debt, but unfortunately more debts are coming in the company, but less and less debts will improve this criterias which is there. So so I hope that I've answered your question on criteria in the stock market, because we believe in transparency. We believe in sharing all this because this is for the Muslims at large. So we believe this should be a benefit to Muslims, and they should try and put their money into equity markets in a set criteria. They can put money into, uh, and if you see, we have on our website also given the Sharia board's certificate. Okay, why and what all they are certified. So for the more detail about the criteria, it is there in it. It will be in our on our website. Sharia 7. They've also not really given the criteria, is also the reason why they have given that is there. Now somebody asked me market question, is this a good time to invest? Now, often when the market goes down, people say that is this a good time to invest? Now, it's difficult to say whether it's a very good time to invest, because market can further correct. If market goes below 17,400, it will start again a corrective action, and this corrective action can take the market to initially 7,000 and then below further that. That's a possibility, because when the market starts going up, it goes up. When it starts going down, it goes down. That is the character of the market because of the profit taking, because of many other factors in the world. Globally, there are a lot of issues. Inflation is a burning problem, and so on and so forth. So, market, one has to observe it uh, and look at it selectively, and but there are selective some companies, lesser companies than it was 2 months back. But this time, the companies looking good to invest is far too less. So I suggest you don't go all out and buy. It doesn't mean tomorrow market will go up. To once again, I said it that it is bad, but it needs to shows the signs, like So I would be happy to buy once the market closes above 18,000 to have a enough strength to see higher levels, and there are a lot of good stocks in the market which can be invested. But this is not you have to go all out and buy. If at all you want to buy, you may buy say 40, 30, 40%. Wait for the correction, or wait for more stability in the markets. I would suggest that. So if you have any other questions, people can put them, um, and we'll answer them, inshallah. I hope I would, time is over, and I would like to can just finish this webinar, and inshallah we will come up with more session in Hindi also, and other subjects also. So I would just say, uh, pray for us, that we can spread this uh, knowledge, and perhaps next month, this is the first webinar we did. We had that courage. We took the courage to the first webinar, but soon we will, inshallah, next month come out with more webinar, with more topic, with the broader horizon after taking the feedback from the people. So, uh, inshallah, assalamu alaikum, and pray for us.